Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at Domino's versus Papa John's and which pizzeria will serve investors best. Also guys, before we jump into this video, I just have to note that I'm already so hungry just by making this video. I'm probably going to be ordering pizza right after this. So putting my pizza cravings aside, without further ado, let's jump into this video. 2022 has been a mixed bag of emotions, with the worst of the pandemic behind us, and most of the employment data is also picking up, real wages are rising, demand is resurging. All this has been good, but meanwhile, Russia's invasion of Ukraine has sent commodity prices through the roof. But inflationary prices have been impacting groceries and fuel prices, which has resulted in consumers spending less of their disposable income on things that they would have loved to. But let's take a look at the restaurants industry. Stifel Nicolaus analyst Chris O'Cull released an update on the restaurant industry. And according to O'Cull, he said that the geopolitical environment and rapidly rising prices have presumably been the driving factors behind a recent weakening in forward-looking consumer confidence measures. Moreover, findings from our recently completed survey indicate that consumers, especially low-income cohorts, have started adjusting their buying plans due to inflation. The analyst survey showcased those consumers who are much more likely to cut their spending on restaurants if the situation deteriorates further. In such an uncertain consumer spending environment, we're going to look at two pizza stocks that could take a hit from the current pullback in discretionary spending. Also, something to note, Russia is an essential producer of wheat, which is an essential ingredient for pizza dough. The ongoing war has actually significantly increased the price of wheat, with several other trade restrictions against Russia. The prices are nowhere near tipping points, but this could increase the cost for pizza makers. So let's take a look at Domino's Pizza. Its ticker is DPZ. Domino's Pizza was founded in 1960, and the Domino's Pizza brand is one of the hot favorites of pizza lovers with its array of everyday value meals, combo deals, suiting each individual's appetite. The pizzeria operates through a mix of a company-owned and franchise models, both in the US and international markets. The current price for Domino's Pizza is $394.79. The analyst rating consensus is a moderate buy, with 23 ratings, 8 a buy, 14 a hold, and 1 a sell. The analyst price target is $469.26, which is an 18.86% upside from where we're at, based on 23 Wall Street analysts offering 12-month price targets. The Domino's stock has lost over 29% year to date, and it's gained 3.6% over the past year. The company pays a regular quarterly dividend of $1.10 per share, reflecting a current yield of 0.98%, which is substantially higher than the sector average of 0.44%. And to date, the company has approximately $700 million in share repurchases remaining under the current program. And for its recent Q4 2021 results and the year ending January 2nd, 2022, Domino's missed expectations on both revenue and earnings. However, the company did manage to report moderate growth in the same-store sales for both Q4 and fiscal year 2021. At the end of the quarter, Domino's had a total of 18,848 stores across the globe. And as a tradition, Domino's provides an outlook for the next 2 to 3 years timeframe and global net unit growth of between 6 and 8%. Historically, Domino's has a compound annual growth rate of global store count growth of 6.6%. And this is important to note because typically a restaurant's business growth is measured by store growth. The higher the number of stores open, the higher the growth, and vice versa. Analyst Andrew Charles from Cohen & Co. has downgraded the Domino's stock to a hold from a buy rating. He also lowered the price target to $390. According to Charles, Domino's is expected to open a lesser number of stores in the US as compared to its optimistic outlook. The analyst had a glimpse into Domino's franchise disclosure document, FDO, given to prospective franchisees. The FDO showcased lower projections of future store openings, which compelled the analyst to lower his forecast for 2022 and 2024. Accordingly, Charles now expects Domino's new stores growth to be in line with the compounded annual growth rate of between 6.2% and 6.5% for 2022 and 2023, at the lower end of the company's guidance. And also, just a note, after Domino's Q4 earnings miss, several analysts have actually lowered their price target on the stock, and a few have even downgraded their stance. Now let's take a look at Papa John's International. It has a ticker PZZA. By the way, I love the ticker because it sounds like pizza without the I. Bad joke. But anyway, Papa John's operates on a similar business model to Domino's. It has operations both in the US and abroad. Papa John's focuses on using fresh ingredients instead of frozen, and this has resulted in consumers' favor towards the pizzeria's offerings. Papa John's stock has lost 19.6% year to date amidst the broader market sell-off compared to an 18.3% gain over the past year. The current price for Papa John's International is $103.80. The analyst rating consensus is a strong buy based on 12 ratings, 10 a buy and 2 a hold. The analyst price target is $139.36, which is a 34.26% upside based on 12 Wall Street analysts offering 12-month price targets. Papa John's also pays a regular quarterly dividend to the tune of 0.35 cents per share to shareholders with a current dividend yield of 1.2%. The company also has approximately $411.5 million remaining under its current share repurchase program as of February 17, 2022. And for its Q4 and full year fiscal 2021 results ending December 26, 2021, Papa John's beat both revenue and earnings estimates despite supply chain, labor, and Omicron-related challenges. Also, the company even reported a solid jump in both its comparable sales growth and global system-wide restaurant sales growth figures. Also, Papa John's ended the fiscal year with 5,650 stores worldwide, with 250 unit additions in the year. Also, the story does not end here, you guys. Post its earnings, Papa John's has announced a historic strategic deal with FountainVest Partners to open over 1,350 new stores in South China by 2040, which is one of the world's fastest growing pizza delivery markets. And similarly, on March 31st, Papa John's also announced a major strategic refranchising agreement with long-term partner Sun Holdings to accelerate domestic development. The latter also committed to opening 100 new stores across high-growth markets, including Texas, by 2029. Earlier in March, analyst Chris O'Cull revisited the impact of rising wheat prices on Papa John's performance due to the ongoing war. The analyst wrote that Papa John's uses hard red spring wheat in its pizza dough, which is mostly sourced domestically as opposed to the winter varieties produced in Russia. Nevertheless, this analyst stated that prices remained elevated year over year in early 2022. However, the recent conflict has exacerbated the rise in wheat prices. In the short term, we do not believe the company has significant exposure to rising wheat prices given its forward buying strategy. However, if recent market prices persist, we estimate it could pressure restaurant margins by roughly 50% in the second half of 2022. He still has a buy rating for Papa John's. So guys, what do you think of Domino's and Papa John's? Are you guys bullish on both or one or the other? Let us know in the comments below. Also guys, remember this is not financial advice, but we'd love to hear from you, so comment down below. Thank you guys for watching, and I will see you in the next video. Bye!